Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, representing Oklahoma City and Tulsa for investors in residential real estate. I've been gone for a while. We've been out of the country and on a long vacation, had a fantastic time, but it's time to come back. It's time to work. Unfortunately, I have a crew in Oklahoma City and Tulsa that does take care of things. But I want to talk a little bit about what's going on with interest rates. You know, the CPI came out this week. That's the Consumer Price Index. And this is crucial for what the Federal Reserve does in terms of movements on interest rates. And it came in better than expected for the first time in a while. And so the Fed's been pretty hawkish. Last year, they thought that there would be 6 to 7 rate cuts maybe in 2024. Now the Fed is down to 1. Now that may expand, but this is good news. It's not the 2% inflation target that they wanted, but it is at 3.4% when the expectation was 3.5, so it's moving in the right direction. Core inflation, which is things like energy and food, improved. That's also very, very good. So the thing that happened was an immediate cut in interest rates, so about 1/8 of a point. Now that doesn't sound like a lot, but if you take the affordability factor in Oklahoma City and Tulsa, it does mean a lot. And if this is going to be the movement, and remember, rates go up faster than they go down. So just seeing finally, after the last 60 days, a rate cut is, to me, a great victory. And if next week, if it kind of follows with another 1/8 of a point, then we're really solid on positive cash flow. And this is something that is extremely important for our investors. They want to pay for the investment, but they also want to have a little bit of extra change involved also. So if you take that into case, and if you think that there's a possibility that July or August, that there's a rate cut, then we're going to be able to get below that 6% level in terms of investors. And again, if the rents are high enough and the prices are good enough, if we could get to 6% or 5.75, the numbers look really, really good. And as I've been telling our investors, I'm not expecting strong rate cuts probably till 2026. But this becomes the perfect opportunity to very quickly do a refinance, even if you're going at 6.125 or 6.25, 4.75%, if that comes up in 2 years, you're going to refinance and your positive cash flow is going to be even stronger and you're not going to lose that much time. So good news on the Consumer Price Index this week, good news on interest rates. There's a real possibility that next week we may see a little bit more shaved off of that. I'm going to do a Monday video once I get the interest rates in, because we typically get them on Monday, to give you an update, let you know. But good news for investors, this is going to make things better for you.